Okay, let's talk about the trade today. This is the Russell 2000 5-minute chart, and here's today. We opened up here, kind of rallied up. I was looking for a place to short, and got in here around 797. I looked at this gap over here. The Russell closes this gap 71% of the time the same day, which it did. I've saw this little area over here, and pre-market I had this area defined as a place to go long, to go short, and this area to go long as a possibility, and this is another long down here that I decided before market that were extreme enough that I would take. This here, what happened is we had extremely large amount of volume today, and volume usually what I've found in the past is that we get more of these V moves, these moves up out of this area into this supply zone, and a rapid move out of it, and that's what volume gives me, what I call a snap action. So saw that. I was waiting for this up here, but as I seen price stalling, which will be a lot clearer if I bring this tick chart over here. I was looking at this, and price was just moving sideways. And to me, I just thought I'd come in here because my risk would be up here at the top of this cycle high. So I went ahead and took a short. I waited through most of this stuff right here. It, actually it was about 5 minutes of sideways movement, and then once it broke lower, I was able to use these moving averages to manage my trade. Pretty much, once it broke above this 20 moving average, I was able to remove 3 contracts. As it broke above this 20 again, I took 3 more off, and as it broke above the 50, I was going to take 2 contracts and let 1 ride, but I screwed up and just went ahead and got 3 of them out. So it was a good day. It was I hit a home run. I usually do that about once a week. I'll hit a home run, and this week it happened today. So on this 5-minute move, you can see that price never rallied up to this point. Sold off, filled the gap. I thought this was a good place to turn around and go long, but since I was what I called married to a short, I wasn't able to take that opportunity. And then as I scaled out of the trades, I would probably suspect on that tick chart, this was probably the area that I accidentally exited all my trades and got out of this. But it was a good run. I more or less took some out in this area as it came, and I use more of a trailing stop than targets, but as we get to those target areas, I will tighten up my stop. So I'm not going to lose. If price sold off and I was I'm looking to get 3 points, and it had a momentum move like this, and I'm up 5, I'm not going to just take the 3 arbitrarily. I'm going to go ahead and maybe get 5 or 7 or 10 points rather than but if it does move back, I'll tighten up that trailing stop, and in this case I probably got knocked out in this area. I'm part of my position, but that's how I trade the Russell. And you can see that gaps work 71% of the time. It's a good odds. We came down to this pivot area, though it's kind of like horseshoes. I see that it kind of respected that area, came up to this dotted red line as Globex lows. This is yesterday's highs. This is Globex highs, and before the market I had these areas set up, and as you can see, this was set up on S1, and it hit it, went past it just by a tick or something, and rallied out of there for a good day. I did take this in sim, but I wasn't gonna risk my money in a live trade. But that's I made my week so far, so I'm happy. I'm looking for 5 grand a week, and this trade and a little bit of yesterday's trade put me over that mark. So I can take it easy and take a deep breath and not worry about it. So it's a good start, and I think I think this sell-off was just really a setup for all those hedge fund managers to for the first of the month to have a better buying opportunity. But we'll see.